IS Commodities, taking a look at the previous week in review, and a pretty ugly week overall for all commodities, as we've seen nine separate different commodities actually post contract lows for their commodity. And the CRB index, which is actually a measurement, it's a basket of commodities. It's a weighted average, mostly weighted to the heavy side of the energies, but posted lows this week that we haven't seen since December 2002. So certainly there is not a very good feel out there as far as commodities are concerned. Now let's just take a look at some of the ag commodities and where we close for the week. Take a look at corn. December corn was down almost 15 cents on the week. The December closing at 358 and a quarter. November soybeans went off the board today at 859. January takes over as bleed month. Down 12 cents on the week at 855. Again in the January contract. Wheat was the loser, down almost 28 cents on the week in the December contract at 459 and three quarters. December cattle down 4 and a quarter this week at 130.67. December hogs down 20 cents at 155. Looks as though crude's going to close lower on the week as well, flirting right around that $40 level, still trading at the time of this broadcast, but we're down about $3.50, somewhere above that $40 level. And the dollar steady on the week. I wasn't able to push up to that $100 level, but we're still holding the gains for the most part. Again, trading right here at the time of this broadcast as well. One of the big items this week in the grain market was, of course, our monthly supply and demand report. Trade expecting a bearish report due to the fact that we're expecting increases in production for both corn and beans. And we did get those increases and then some. Just taking a look at the corn yield without acres alone, corn yield came in at 169.3. That is up from the previous month of 168. That weighed on the market much larger than anticipated. We did increase the feed residual with that a little bit on the demand side of the equation, 25 million. But unfortunately, we lowered exports 50 million, and we also lowered ethanol consumption 75 million in this report. So that popped that carry out or that carryover use of corn for this upcoming year in this report larger than expected. And we did come in at 1.76 billion bushels. That's compared to 1.561 billion bushels last month. So we're looking at over a 200 million bushel increase. And actually, that is larger than last year's report at this point. So again, it's not burdensome of 2+ billion bushels out there, but there certainly is plenty of supply available. And also, we did see the world numbers push significantly higher too, and the big push came there from raising Chinese stocks. As the Chinese are trying to get rid of some of the corn, they're trying to cut prices, cut deals, get some of their stock reserves out and about, but that did show up on the world numbers this week as well. So corn did trade down 15 cents lower, traded lower immediately upon the release of the information. Did not take that low off the balance of the week, but we did close near the lows this week as well. Very quiet trade though post-report, a 5-6 cent trading range from the release of the report. After the release of the report, basically Wednesday, Thursday, and Friday. We are seeing basis firm up a little bit out here in the country. Again, you have the Eastern Corn Belt, very tight basis, as the yields, as shown again from the state's perspective, is lower out there, and we more made up for it in this report with Iowa, Iowa, Nebraska, Minnesota. We all seen record yields there. So that's taking a look at the market, or at the report there. Taking a look over at the soybean S&D. Again, we were expecting a small increase or small bump up in yield. We got 48.3 bushels an acre. That's up from 47.2. So we've seen an increase of a bushel an acre. That's larger than anticipated as well. And in fact, that's penciled in a record yield for this year. And again, we left acres alone. With the large increase, we did increase our crush and our exports on the demand side of the equation. We increased our crush 10 million to help offset some of that, and exports 40 million to help offset that. But all said and done, we did increase our carryout level to 465 million. That is a big chunk. That's up from 425 million last month, 40 million bushel increase, and we're up above last year's carryout level as well. So from a fundamental perspective, it's hard to paint a rosy picture right here with the soybean carryout. Also, keep an eye on exports because we are lagging right now as far as sales are on the books. We are exporting a lot of beans, and we're ahead of last year's pace for the actual physical disappearance of beans. But again, sales on the books, we are lagging last year. We need to pick up that pace as South America starts their planning process down there. And as we speak, the country, Brazil's over 50%, Argentina's under 50%, and all eyes will be watching the weather down there for weeks to come. There were some dry concerns earlier in the northern part of the country, or northern part of Brazil. Rains are scheduled to come in. Rains have come in. December is probably a time frame to keep an eye on as far as any type of weather concerns down there. And another event to keep an eye on is the Argentine election down there, the 22nd of November. Depending on who gets voted in, you could see reduction of the export duty on soybeans down there, which means there would be more available soybeans to dump on the open market. So that's something to keep an eye on as well. That, along with our weekly exports, to see if China still comes in and aggressively purchase beans. So a very quiet market there as well. We did close lower on the week. Surprisingly, we did only close down 12 cents in the January contract. Taking a look at the livestock markets, cattle was a whipsaw week. One of the largest volume weeks on record. In fact, I believe it might be the fourth largest volume week that we've seen traded. And this is on a quiet cash trade yet to be recorded, or very little cash yet at the time of this broadcast. So we are seeing a lot of volatility in the cattle market right now. We did see boxes settle off this week. We were down again today, cleared down below 210 on the choice cutout, started out the week up above 218. So we're seeing some of the demand back down in the retail section. The packers are needing to buy cattle cheaper to help offset some of those losses right now. But again, a lot of volatility out there, and we believe we're getting a little through some of that heavier cattle as we speak. But I think cash trade, wherever it trades here, will probably give us the tone to start next week. Chart-wise, technically, the charts do not look good. Hogs, on the other hand, may have found a bottom as far as charts are concerned. We did see the weaker futures and cash trade for 2 straight weeks down. We were able to bounce a little bit in the December contract. The cutout has been weakening. Cash was a little bit weaker today as well. But maybe we can find some lows we've seen earlier this week in the hog market. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.